So for more on the implications of slow economic growth on the job market, we are joined by economist Dr. Elifas Ndo, as well as FEDUSA Deputy Secretary General Ashley Benjamin. Gentlemen, a good evening to you. Thank you so much for joining us. That number, 0.1%, Dr. Ndo, I think I'll start with you. I mean, when you just hear the number, when Stats SA gave it to us this morning, number one, did you have any high hopes that we would get any better a digit in terms of economic growth in the country? And then your thoughts on really how we start to turn things around, particularly for an unemployed person who's watching this conversation right now.
Okay, good evening. I did not have high expectation concerning the economic growth number for the first quarter because all sentiment indicators were very gloomy. They were picturing out a gloomy outlook because the consumer confidence is very weak. You look at the building confidence is also weak. Business confidence is also weak. So I had less expectation of a very high number on economic growth. Even yesterday, the ABSA Purchasing Manager Index is also indicating that manufacturing sector is struggling sector. I expected a weak number. Given also the environment that we're in of trade uncertainty, it's not a conducive environment for a high growth rate number.
Yeah.
So for the person in job market, I can say, let them hang in there because the government has got a plan to roll in the infrastructure despite the budget delays. And once all these reforms and infrastructure gets rolled back, I think the economy will also pick up, including the construction sector as well as the manufacturing one.
Yeah, I mean, that is somewhat optimistic, but of course optimism that looks for what we'd be seeing in the long term. Ashley, perhaps we bring you in here as FEDUSA's position on GDP growth in the first quarter of the year and really what it means for the job market, particularly in the industries that we are seeing some decline. I mean, 16% for the for agriculture, but that's where we've seen the growth. And in fact, that's the industry that almost saved us from a contraction in the third quarter. So your biggest concerns around the most sensitive sectors?
Good evening to you and good evening to the viewers. Let me say it is disappointing to say the least, but unexpected, as my colleagues indicated. It is time that government now really wake up and realize that their austerity agenda is not working for the economy. The austerity agenda is anti-growth, is anti-employment. And we hope that, in particular, the National Treasury will realize that their obsession with fiscal consolidation or budget cuts is putting us in a situation when another 291,000 workers, decent jobs, is now joining the unemployment queues. It is disgusting and it's to say the least.
Yeah, very concerned. Interesting that you've already touched on the budget, which is where I was going to go next, because, of course, you do have one of our top stories today, of course, being that the EFF not being successful in the courts in trying to halt the implementation of that fuel levy that now comes into effect tomorrow. And Ashley, I'll sit with you on that. What that does to some of the more vulnerable working class, that we do have, in fact, this fuel levy hike taking effect tomorrow on top of the slow economic growth?
Well, it is disappointing, but it is what it is currently. It's going to be implemented, but it's got a ripple effect on the economy. Millions of workers rely on public transport, in particular minibus taxis, that they commute from home and work to work and back. And naturally, these fees increases if there's increases to the fuel levies and that. And it's an additional burden on working class and the poor. So I think it is not a well thought out strategy. And Treasury seem to be obsessed by alternatives. Their only alternative is to look at austerity. If I can't get an increase in VAT, I'll increase the fuel levies without thinking of the broader consequences on economic growth and how it affects the economy negatively. This growth per annum if we want to create millions of jobs over a year. Just to give you some interesting stats, from 2009 up until 2024, so it's a period of 15 years, the economy has been on an annual growth of 1.1%. If you average it out in 15 years, 1.1%, what do you expect? What jobs can you create? How can you grow an economy with such growth? And therein lies the problem. I think the conservativeness of national Treasury and the South African Reserve Bank, this is our problems. I feel sorry for President Ramaphosa. In a number of sonars, he speaks the right things. He talked about infrastructure investment. Not so long ago, 2023, he talked about 940 billion rand. When the budget comes out, there's no 940 billion rand in the medium-term expenditure framework. So who's fooling who? And that is the problem. We think the Treasury is too powerful. They can veto the decisions, which is not in the best interest of the country. Look at the interest rates. I mean, it's disappointing. We expected a 50 basis points cut in the repo rate. It's only 25 basis points. It prohibits growth. It prohibits investment. But, you know, the powers that we can't see, that they are actually doing a disservice to the country, to the nation, and to the economy. So the quicker Treasury wakes up than the Reserve Bank, I think we can put this country on a growth trajectory again.
Yeah, Dr.
And created much needed jobs.
Dr. Doe, I see you've been full of laughter listening to what Ashley Benjamin has had to say, and you can share your thoughts to some of the points that he's made. But just as I stack some of those ideas, I mean, he talks about how for 15 years we've seen an average of around 1.1% annual growth for GDP. These are some of the projections, though, that we saw at the beginning of the year. The SA Reserve Bank at the beginning of this year expecting that this year we could see a 1.8% percentage growth. Here's the reality, is that 1.8% sounds like a terrible number, but at this point one would argue that that is, you know, reasonably ambitious. I wonder what you make of that, and if you start to recalibrate it, what would that look like?
Yes, I think it's an ambitious growth target because even the IMF, they did downgrade the South African economic growth. Considering what's happening globally, we are also an open economy. We depend on trade. And if these trade tariffs are also imposed, we have got a problem. And remember, we still also depend on the AGOA. And if the benefits of AGOA are taken away, we've got a problem on those sectors that export to the AGOA. Because currently, I think we've got a problem with the automotive industry. I think they contributed maybe negative, if I remember correctly. And then the low economic growth, it also emanates from our policies, reforms that are not being implemented quickly. If they're being implemented quickly, then we could also be instilling confidence, and the investors, they'll also have that confidence to say there are no water shortages in South Africa. They've got confidence in that their production can go uninterrupted. And remember, I think the end of last year, we had load shedding after a long period without load shedding. And that brings back memories that power is going to be a big issue going forward. So we need to have policies and reforms that are speedily implemented so that they can open up the backlogs or the bottlenecks wherever it might be. For example, the ports, they need to be efficient so that the exports can be properly handled. And then those who are producing goods for exports, because of high demand outside, they can employ more people. And remember the logistics sector, if it's not efficiently operating here, we've got a problem. That there are people who need to be employed in the logistics sector. We also need to transport things efficiently to wherever destination they might be going to. So we need reforms that are implemented speedily so that they can be properly evaluated, and they can also open up the sectors where all people with all skills can be employed, low skilled, high skilled, they can also work.
Yeah, I was going to ask for your call to action. I think you've already done that, asking for the implementation of reform. So Ashley, I'll let you have the last bite here. You know, Dr. Ndo talks about the low confidence levels that we've got. And this is the reality, though. You have a country where at the beginning of this administration, there was so much optimism around a government of national unity that is going to be able to help us see that economic growth. We then had so much positivity around what load shedding would look like, but we had load shedding make a slow but somewhat of a return in January this year. And then, of course, you've got the government of national unity showing some cracks, if that's the words that you choose. So what is your call to action, Ashley, on how to protect some of the more sensitive sectors? And I go back to that because, again, agriculture at a growth point of 16% saved us from a contraction. Without agriculture, we would have been contracting by 0.3%. But agriculture is facing the threat of the future of a goer, and that what very well looks like. Ashley, so what's your call to action?
No, thank you for that.
Yeah.
And I think let me start by let me start by saying the problem once again, and I had to focus on National Treasury and because therein lies the problem. So their views are very limited in how they see economic growth, and that's why South Africa doesn't have a budget problem or debt problem. We have a growth problem. So Treasury's view is very limited to three things. Basically, the choice of borrowing, tax increases, and then spending cuts. That is how they view the economy, and I think the economy will grow with that mindset. It cannot happen. This economy needs growth. So what needs to be done? Expansion, stimulate economic growth through implement expansionary fiscal policies to boost demand and invest in key sectors of the economy, like you said. Manufacturing is key. Jobs multiplier, labor-intensive sectors, mining, agriculture, they need that boost. They need the protection against high tariffs, high electricity prices, high administered prices to create jobs. Number two, support employment initiatives through targeted employment. And at least there's a bit of hope. If you read the papers recently, the basic employment initiative is back again with 200,000 youth that's going to be employed in those temporary positions at schools, over 20, I think about 20,000 schools. I think it's rolled out already. That is the type of investment you need on a massive scale. 200,000 young people get job opportunities to be assistants in schools. That is what we need. The last issue is that also infrastructure development. Now, the president talk about infrastructure investment, but Treasury doesn't provide the resources so that the economy can grow. And we know when there's infrastructure investment, the economy grows at a rapid pace.
Yes.
And it creates the necessary job, it brings income to poor communities, and that is what stabilizes the economy.
Yeah. Gentlemen, I'm going to have to leave it there. Thank you so much for your time. Dr. Elifas Ndode, who is an economist and author, as well as Ashley Benjamin, Deputy Secretary General at FEDUSA.